today we're going to talk about the ultimate guide to buying a multifamily home with an FHA loan. So stay tuned to learn more. Hello, this is David Xie with the Xie Mortgage Team. Multifamily homes. We've all seen them, we've all heard about them, and we all want to invest in them. And that's really like the main homes that people are looking for now. Why? Why are they all looking for this? Well, multifamily homes allow you to live in one of the units and rent out other units to generate cash flow. So that's typically house hacking 101. The reason people use FHA loans over conventional loans is because of the lower down payment and initial investment needed, and the ability to ask for more closing costs. The way that this all works is, let's just say we're looking for an FHA loan right now. 3.5% is all that's needed. If we were to look at a conventional loan, which is the alternative if you weren't in the military, then you would have to put down 25% if you're getting a conventional loan. However, there are some factors that will lead to a lower down payment, and we will talk about that on another video. What is an FHA multifamily loan? It is basically a loan that is going to allow the borrower to be an owner-occupant as well as an investor, and to purchase a multifamily up to 4 units without any change in guidelines. The change in guidelines, though, that is going to benefit you is the ability to take that rental income and use that to offset it and count that as income so that you could qualify for a little more. Another advantage of using an FHA loan to purchase a multifamily is the more units you get, the higher the loan amount minimum is. For instance, with the FHA loan on a single property, if you were looking at the regular FHA loan limits for 2023, a single unit you'd be able to get, the maximum loan is $472.30. On a 2 unit, you'd be able to go to $604,400. On a 3 unit, it's $730,525. And then finally on a 4 unit FHA loan, you can go up to $907,900. It'll increase your buying power, number one. And with the increase in buying power, you're going to be able to put tenants in the other units to be able to help you cover most, if not all, of the mortgage payment that you're going to be taking on. A traditional FHA mortgage program, like I said, is a lower down payment, and it also helps people that maybe have like past credit mistakes to participate in the housing market, with the lender taking on less risk because the government's backing these loans when we're originating them. Anything that's over a 4 unit will require a commercial loan. So anything over 4 units, there are some programs out there for that, and we can help you with that as well. The loan requirements are usually going to be either a single family home for an FHA or a multi-unit single family home. We are going to be looking at the income, the credit score, and debt to income ratio for qualification. But like I said, we can use that income to offset some of the debt to income ratio. Also, there are special appraisal requirements on it. An appraisal is basically an opinion from a certified person that's going to be able to tell you what the value of the house is. When they go into the property, they are going to be looking at safety, sanitary, and structural issues. So when you go through the process, you're going to start out by doing a home inspection, and that's going to tell you what's wrong with the house, and then you're going to negotiate all of that. And finally, once you have the home inspection signed off on, then we do the appraisal. The appraisal covers a couple of things. Number one, it's going to tell you what the value of the house is. Number two, like I mentioned, is going to tell you whether it's safety, sanitary, or structurally sound, and what repairs may need to be done to the house in order to meet the HUD FHA minimum requirements. Along with that, the appraiser is going to give us a rental income analysis. So they're going to say, hey, based on what we see, this house is going to be able to get X amount of dollars for each unit. So your main unit is going to be one amount, and then the other units are going to be other amounts. So the unit that you're going to be occupying is on you, and then the other units are going to be taken into consideration when it comes to rental income. The credit score minimum on an FHA loan, for 3.5% down, it's 580. However, anything under a 580 credit score will require 10% down. And if you have anything such as a foreclosure or bankruptcy, the waiting periods on those are typically between 2 and 3 years, unless there's a major unforeseen circumstance or extenuating circumstance. And at that point, we may be able to use a letter of explanation to kind of offset that. We do use a front end and a back end debt to income ratio. And what that means is we're looking at what the housing payment is versus your income. And then we're looking at the housing payment plus all of your additional liabilities versus the housing payment, and we're going to use that as debt to income ratio, and then we'll pull in the rental income as an offset of your income as well. So as long as the debt to income ratio is within 43 on the front end and 56 on the back end, you should be fine, depending on credit score and other factors when we talk about that. And it can be low as 32 and 43 on the front end and back end when we're looking at debt to income ratio. So finally, the importance of all of this and the long and the short of all of this is the fact that, hey, we're able to get multifamily properties. We're able to get it at a lower down payment than a normal conventional loan. And we're able to use some of the income to help you offset it and build that multi-generational wealth that a lot of you guys are looking for. So if you have any questions or concerns on how to purchase a multifamily property, whether it's using a VA loan, a conventional loan, a USDA loan, or even an FHA loan, I'd love to help you out. My name is David Xie. My phone number is 757-478-8493, and I will talk to you guys later. All right, bye.